Good morning, friends. I'm Nandakshi Swami. Welcome to my channel, Smart Index Edge. Previously, I made for the multi-bagger stock selection for intraday trading. So I'm going to do again this video prerequisite for the explanation on the chart how to trade after the selection of this stock selection. The first thing is it involves stock selection process based on the mathematical calculation. We are focusing on the significance of 66.6% threshold, which serves as a pivotal point in our analysis. This percentage not only reflects a critical metric, but also symbolizes a turning point in stock price movements, akin to a 90-degree angle within a circle. I've already mentioned in my video how to calculate. The first thing, you need to calculate the square root of the closing price of the stock, and then you are multiplying with 66.6, and then whatever the value you get it, you are taking the percentage of that 66, the value percentage, so that it will be very manageable value, which can be added or subtracted to the closing price. Then you will derive two levels, support and resistance. In that video, I've already made in a detail how we are going to do that. So based on that, we have created a screener for that, for the stock selection. So we are getting on the charting, we have done that. So I have provided in the link the screener also. Here, this is the video for the people who are visiting my channel for the first time. It is a repetition, but it will be helpful for you to refresh your memories. So stock selection funnel, how it is done. Initial, we are getting the stock data, that is closing price of the stock. And next is, this is the strategic criteria application, 66.6% evaluation. So we will get a promising investment opportunity, not only investment, on intraday, you will get on that particular day where you get this stocks on the screener. It will be a momentum stock. You can trade for minimum to 2 to 3% gain in the stock. Sometimes some stocks will give you 8% also. So why we are selecting these type of stocks is to trade in options. Those stocks, even though they were illiquid in option platform, they become liquid, and they provide an opportunity for you to capture the momentum and make profit exponentially. That is the idea of this stock selection. Mathematical foundation of stock selection, I have explained it to you. That is the calculation, what we are doing it. This is the slide to explain you how it has been done. The choice of 66.6% as a key threshold is not arbitrary. It is deeply rooted to mathematical principle. This percentage correlates with a 90-degree angle, which is often associated with significant changes in direction. In the context of stock prices, reaching or exceeding this threshold can signal a turning point. Nothing but we are identifying the breakout stocks. I've already explained in my previous video, the stock selection is the closing price of previous, the stock we need to get above the 5 days closing price. Based on that only we have made the screener. That is the thing. So it will be in the momentum. So we are getting the stocks on the particular day from the screener. We are picking it up and for our trading for that day, because they are breakout stocks, momentum stocks. Why momentum stocks? These stocks in option premium, they will be liquid. They will increase exponentially. So on that particular day, we can capture the momentum and make exponential profits. That is the idea of that. Importance of 66.6 threshold in the stock prices. Why is 66.6% chosen as a key threshold? That I have explained. This is the flow chart. It is based on mathematical principles. You need to remember this flow chart. What does reaching this threshold signify for stock prices? So when you get the stock from the screener, you should understand why it has been selected. When this type of stocks has been selected, there is no chance of these stocks going down or anything. It is a sure shot, what I can say is a selection. With confidence, you are entering into the market. It is not going to fluctuate or anything. You will be entering into the stock with confidence. That is the idea of that. Concluding, strategic implication, we aim to enhance our ability to identify stocks with high potential for appreciation. That means we are selecting the stocks that is nothing but weekly breakout stocks. That means they are, after completing one cycle of up move, they are entering into a second phase of cycle of up move. That is the idea about that. This is the graphical representation of stock selection process. I have explained it to you. 66.6% threshold we are applying to filter the stocks. So we get filtered stocks with the momentum. Not any ordinary stocks you are getting. So if you check the stocks, they will be in the radar with volume, with open interest, high open interest increase. So everything will become added to these stocks. These are all high potential stocks. In conclusion, our stock selection process is heavily influenced by mathematical calculation. So next, I am going to the slide for trading for option selection. Trading strategy for option selection and timing. See, after selecting these type of stocks, we are aiming to cash in our profits, not on the equity, but we are entering into the option. So what we need to do? So what we need to do is, first thing, you need to select the option premium, and also timing is very important in option entry. In this, we are going to select out of the money options. Why out of the money option is because we know the target. Definitely, it will achieve 1:2 target measured more in the market. So we are confident of the achieving that target because of our stock selection. The stock selection, these stocks are in the momentum. So we are selecting out of the money options because they will be a little bit cheap. It is affordable for you people. And also, while trading, they will give you profits. And after selection of the out of the money options, timing market conditions is very, very important. So we are analyzing the market trends for optimal entry. Next is implementing stop loss measures to protect our investments. The first step involves the selection of the options. Next step involves we are identifying the target price in the underlying by seeing this after the selection of the stock, and also we will analyze for the even in option also you can get the target price. This is the flow chart for that. Next step is we wait for the market correction. Once you select the options, it is crucial to wait for the underlying asset to correct and the turnaround. Why? Because initial reaction, when the market opens, the market, they will show a momentum, breakout. According to Gann principle, they will show the structure, make higher high. Even in the 5-minute candle itself, they will make an higher high. Actually, in my previous 5-minute trend strategy, we were using it for the index. Here, the strategy, we need to wait for the structure to create. Usually what I have observed is within 6 candles, that means 30 minutes, around 9:45, it reaches the peak. Underlying, it will reach peak, and by around 11 means 10:10, it forms the base. So it is very, very essential for you people to wait till that period, because you will be entering into the option at a discounted price. Around that time, when the underlying corrects, you need to wait for the correction. Usually it happens around 10:10, where the price will become price will be squared with the time. So at that time, the price will come to the almost near the low point of the opening low point of the day, almost near that. That is very essential. Even sometimes option premiums also will correlate with the lowest of the opening of the first 5-minute candle. When you see after confirmation around 10:10 in the market cycle, I'm going to explain it in the chart in my next video. Wait for that. I'm going to make that video so that you will have practical knowledge. I will be explaining it in the chart. Before that, you should understand what I'm doing, what is the concept behind my strategy. So that's how we are entering into a option price at the discounted price. Next step is, first this is the flow chart. Select the options, wait for the market correction, identify price decline, align with the first candle low, almost. Enter the trade. After entering the trade, what you need to do is, you will be entering the trade with minimal stop loss. Stop loss will be very minimal and it is manageable. So you will be entering at a very discounted price with confidence, not random. Here, after entering, we get increased trading activity, momentum building will be there, and improved liquidity will be there in these stocks. Traders employing this strategy may find themselves in a position to cash in profits ranging from minimum 4,000 rupees to sometimes even higher 14,000 rupees. That's what happened in PI industries. And also you get to cash in good amount, nearly 4,000 rupees in the Bajaj Finance. Bajaj Finance came into the screener. Preferably, we are selecting the stocks which they come in the morning itself. So when they come in the morning itself, around 9:15, 9:16, 9:20, the strategy is to wait. We are not entering into the stocks immediately because option premiums will be random. They have to settle because we are going to trade not in the underlying, we are going to trade in the options. That is the strategy. So you need to wait for the market correction. I'm going to explain it to you very clearly on the chart in my coming videos. For today, this is the basic video. You should understand the concept properly, why the stock has been selected, why we are trading in the options, and when we are trading in the options on that day, why we are waiting for the discounted price and everything. You have understood about that. This is the minimum profit and 14th is the maximum profit. So you can this is not a confirmed thing, but it is possibility. Next step is this is a high potential strategy process appealing in volatile market. Consequences will also be there in the market, like risk of losses, but we are minimizing the risk of losses by proper timing our entry with the tracking the underlying prices requires market timing and effort intensive. It is effort intensive. You need to have patience. You need to wait. You need to wait like a sniper to make an entry. This strategy provides a structured approach to selecting options and also timing entries in the market. We are waiting for the corrections and managing risk with stop loss orders. Traders can enhance their chances of achieving substantial profits with careful attention to market conditions and timing. This strategy can be a valuable tool for navigating the complexities of trading. So you might have heard so many strategies for stock selection, intraday stock selection, for option trading, but I have found this as a very best strategy with confirmed mathematical calculation, no look back, you will not have any dilemma. You are entering into the market with confidence because everything is settled. That is the reason we are entering into the market. So we are getting the stock from the screener, selected from the screener based on the calculations. So you can select 2 to 3 stocks. You cannot trade many stocks. As a retailer with a minimum amount of money, you can trade only few stocks. At least you can trade in minimum of 2 stocks. Suppose if the stocks, 3 to 4 stocks comes in the screener early in the morning by the opening bell around 9:15 to 9:20. So you can put them in your watch list and then you can start applying on the chart and assess it whether it is suitable. And I've already given you the indicator, that is the combined indicator for you people with all the 66.66 and 26.6, and also combined with the pi calculation, pi indicator, and also Keltner channel with the modified Keltner channel with 66.6 and 26.6. So everything is set for you people. So you have to trade with the patience. After putting them into the template, you need to wait for the time-wise correction that usually happens around 10:10 a.m. In our Indian market, that's what I've seen in the Gann square of 9 sequence series 2, 6, 11, 19, 28, 28, 40, 53, and 69. These are the time periods around this major turnings will happen in the market. So usually when market opens around 6, that is 9:45, it reaches the peak. Around 11 period means around 10:10 or 10:20, the market forms the bottom, holding the opening level. So you are getting a discounted price at that level and matching with the option premium also. You are entering into a discounted price and riding the momentum. You are going to ride the momentum. You are not disturbed by any candle, green candle, red candle formation. You are not disturbed. You are just keeping the stop loss and you are riding with the momentum till your target is achieved. That is a measured move. That is every stock. In my next video, with the example, I am going to show you people on the chart. This is a video to understand the concept of stock selection, option, how to select the options and how to trade the options, how to time the market, when to trade, when to enter, how to enter. These are the things which has been covered in this 2 presentation. I hope this will clarify everything. You do comment in the section if you are having any doubt. And I'm also attaching in my description previously made video, multi-bagger selection stocks based on the square root calculation. Thank you very much, friends. Nalnakshi Swami signing off.